Hello viewers, we'll be going over natural gas. In this video, we'll be going over my trade idea of the week and how I developed that idea. So let's start off with the technical analysis. We're near 16.8% today on natural gas, which is quite a large movement to the upside. And we are now overbought on the RSI on the 1 hour chart. As for the 4 hour chart, we also see the same action on the 4-hour RSI. We have seen a convergence on the 4-hour MACD, and we are seeing a very large volume to the upside as well. And for the daily chart, we broke above the 200-day moving average, this green line. And if we do manage to close above it, that is a positive sign for the uptrend or for the bulls. And we are nearing overbought on the daily RSI. So there is a pretty good chance that the trend has changed and is changed to the upside. So for my trade idea of the week, I'll be using UNG, and I'll be using a portfolio size of less than 1%. And my entry for UNG will be around, if I were to go long and if it goes back to $10.68, that will be my long entry, and my target will be $11.64, and my stop loss for that long entry is $10.41. On the other hand, if I were to short UNG, my entry will be around $12.04. We are quite near that level at the moment, and my target for that is $10.96, and my stop loss for my short position is $12.47. So now, how did I develop these trade ideas? It all comes from the day-by-day probability model that we have here. And as we progress to the 5th day or week of trading, we have a 33% chance for natural gas to climb higher between 0 to 6%, and a 25% chance for it to climb between 6% to 12%. And to the downside, we have a 33% chance for it to fall between 0 to negative 6%, and an 8% chance for it to fall between negative 6% to negative 12%. So which one of these 12 models we should use as a reference? First, let's use the line graph from here. The blue lines are current trend, and the line overlapping it happens to be the best match. So right here we have our current trend, and the trend below is the one that we found on the line graph above. This trend dates back to January 8th to April 6, 2016. So let's begin comparing both the trends. So we have 1, 2, 3 points. And in the trend in question, we also have 1, 2, 3 points. So there's reason to believe that the trends and patterns are somewhat the same. The outcome and forecast should be fairly the same. So the model that we just examined was again back in January 8th to April 6, 2016. So now we examine day-by-day forecast for natural gas. So we have 1 day out, that will be a Tuesday, and 2 days out will be a Wednesday, and so on. So we have 3 days out, 4 days out, 5 days out. So back then, natural gas was up around, let's say, find the model that we just found. Back then, natural gas continued to climb higher. Back then, it was up around 6.5%. And if we head back to the day-by-day probability model, that coincides with this standard deviation right here, 25% chance for natural gas to climb between 6% to 12%. So now let's examine closer on the technical performance of each trend. So on the current trend we have here and the trend that we just examined. So based on monthly high, back then it was 37% for a monthly high. Compare that to current trend of 28%. Back then it was up 10%. Compare that to 12% now. Back then it was down 2% from 10 simple moving average. Compare that to now 9 basis points up. Back then it was down 2% from 20-day simple moving average. Compare that to down 1% now. And back then it was down 5%. Compare that to current trend, which is down 2%. So there are slight technical differences. One is in the 10 simple moving average. So do keep that in consideration. Again, these models are available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.